Hi there, welcome to Economic Observations. My name is Chris. Today is the 21st of February and thank you so much for watching. This video is brought to you by the Tanzania School Foundation, a nonprofit near and dear to my heart. I hope you enjoyed the long weekend. I was out in Boston yesterday. I participated in a arts market, well, what I thought was an arts market, and there were 40 vendors there and only 7 were selling art. The other 33 vendors were selling vintage clothes. I tell you, the amount of college students with a side hustle was remarkable. And then these other guys would come with their duffel bags and sell them clothes cheaper, and then the others would sell their 1970s, 1980s, 1990 clothes at a premium. People were out and about. I was kind of impressed by the whole thing. The music was going and it was booming. Anyway, that was the first sign of life that I saw in Massachusetts all winter. I was up in a part of Boston called Brighton. It was a lot of fun. All right, well, today we are going to talk about corporate greed. Right? I talked about this before, but we are going to get in depth with 3 companies. I'm going to be reading a little bit, reflecting from my computer. So if you see me look down, I'm sorry, but listen carefully. We're going to talk about a topic that is rarely discussed in the media, and that is the considerable or concentrated ownership and power that a handful of Wall Street firms and investment firms have on our entire economy. This is going to surprise you. The enormous impact that they have on workers, consumers, and virtually every person in the country, including you and I. Today in America, just 3 Wall Street firms, BlackRock, Vanguard, and State Street, manage $22 trillion in assets. So what does that mean? Well, for starters, it means that the amount of money these 3 firms control is nearly equal to the entire GDP of the United States, and it's 5 times that of the GDP of Germany. What do I mean by them controlling it? Those 3 companies are major shareholders of more than 96% of the S&P's 500 companies. They have significant influence over many hundreds of companies that employ millions of Americans and, in fact, the entire country. So let's talk about banking. After the Wall Street crash of 2008, we all remember that well, there was a lot of discussion about wealth and power of major banks and if they were too big to fail. Well, these 3 Wall Street investment firms are the largest shareholders of some of the biggest banks in America. JP Morgan Chase, Wells Fargo, and Citibank. Okay, so those 3 firms own many of those shares. They are among the top owners of all 4 airlines: American, Southwest, Delta, and United. What about healthcare? Together, they own an average of 20% of all major drug companies. See where this is going, folks? Wall Street firms in general have bought up thousands of nursing homes where profits and mortality rates have soared. They are also responsible for the astronomical prices at emergency rooms, increasing prices by over 60% and driving 500,000 Americans to bankruptcy every year. These firms will tell you that they are passive investors, that they are not involved in the day-to-day decisions of the companies that they own. These 3 companies control nearly 1/4 of votes at all shareholder companies, leveraging their power to influence CEO compensation, stock buybacks, environmental committees, mergers, and pension benefits. And in addition to the big 3, a small handful of Wall Street venture firms, so-called private equity firms, nearly shut down 20,000 stores in the retail industry, including Toys R Us, Payless, and Dollar General. and we'll get into how they did that. Let's talk about housing. A small number of Wall Street firms and extremely wealthy investors bought about 1 in every 7 homes in the largest cities in America, and now own over 1 million apartments, hiking rents as much as 30% and neglecting needed repairs and the safety of their tenants. If you haven't heard much about them, you should know that a small number of Wall Street firms control half of the newspapers in America. We're talking a handful of Wall Street firms that buy up companies, load them up with debt, and make huge amounts of money by laying off workers. Toys R Us, Payless, and so many more. They load them up with debt, and they take that debt as compensation. And then the companies go bankrupt. You want to know why there's no retail in America anymore? It's because vultures like these do this to them. When they acquire a company, they don't look after the welfare of the workers. They look at their own profits. Something is wrong in America. Anyway, they lay off workers, slash wages, ship jobs overseas, eliminate health care, and eliminate pension benefits. That's what these hawks do. They're vultures. Anyway, according to recent studies, these 3 Wall Street firms take over companies as a result of leveraged buyouts. Jobs are slashed by 13%, wages fall by 6%, and the companies that are bought by these small handful of firms are 10 times more likely to declare bankruptcy. When we talk about power in America, many people think that it's the President of the United States. He's the most powerful person in the country. But I'm not so sure. Given the enormous power that these CEOs of these extremely large Wall Street financial firms have over our economy. That brings us to Warrior Met Coal in Brookwood, Alabama, where workers have been engaged in a strike for 11 months for economic justice and dignity on the job. In 2016, a group of private equity funds led by Apollo and Blackstone acquired Walter Energy and former Warrior Met Coal. It's a coal company. As part of the restructuring deal, workers were forced to take a $6 an hour wage cut, over 20%, and massive cuts to their health care and retirement benefits. This is what happens when these big companies buy them out. The concessions the miners made 6 years ago saved Warrior Met's $1.1 billion. And now what happened to Warrior Met Coal? The workers agreed to the cuts with the understanding that they would be restored when the company returned to profitability. That's not what happened. Warrior Met has returned to profitability, and now it can afford to pay its CEO $4 million in compensation each year. It has reneged on the deal of offering its workers an insulting $1.50 raise spread out over 5 years, while refusing to restore health care and pension benefits that were taken away from them in 2016. Over the last 6 years, Warrior Met Coal could afford to provide $1.5 billion in stock buybacks and dividends to its wealthy shareholders, a huge bonus to their executives, but cannot afford to treat workers with any dignity and respect. Once again, concessions made by workers totaled $1.1 billion over 5 years. Stock buybacks and dividends over the same time period totaled $1.5 billion. The money's there. They just don't want to treat anybody with dignity and respect. Now look at this. Isn't it ironic that the CEO of BlackRock is the largest shareholder of Warrior Met? Now the odd thing is, you might say, oh well, that's one company. But no, Warrior Met is not an aberration at all. It's happening all over the country to so many firms. At the moment of unprecedented corporate greed in this country, attacks against working people are taking place company after company, industry after industry. Never before in American history have so few owned so much and had so much power over our economy. Some people say, well, that's capitalism. No, that's not capitalism. That's not capitalism at all. Capitalism where people go to work and they earn a fair wage. It's not about corporate greed. It's not about companies buying back these shares right before their earnings per share come out to boost the price, to make it look like they made more money than they really did when nothing has changed. And they will keep telling us that inflation is real and the prices of everything is going up. But the reason prices are going up is because corporate greed is going up. That is why we have inflation. They are raising the prices, cutting jobs, slashing salaries, and they will tell us all this other garbage in the media. Because those Wall Street firms not only have the majority of the printed newspapers, they also control the media and what they tell us. As I talk tonight, the Dow futures are down 439 points. NASDAQ's down 312 futures for tomorrow. They say it's the Ukraine and Russia tensions, and it's a whole bunch of things. Anyway, I will let you wrap your heads around those three companies. Let me know what you think. As always, I appreciate you. Thank you so much for watching. Give this video a thumbs up. Smash the like button. Subscribe to this channel. Call someone, tell them you love them. Be kind. And I look forward to reading your comments. Have a great night.